How do I pay estimated taxes with Form 1040? Imagine having a clear plan to handle your taxes throughout the year instead of waiting until the last minute. That's where paying estimated taxes comes in. If you have income that isn't taxed through withholding, like from self-employment or investments, you need to make these payments. You use a special form called Form 1040S to figure out and send your estimated taxes to the IRS. First, you need to estimate how much money you expect to make this year. Think about all sources of income that don't have taxes taken out automatically. Once you have that number, you can calculate your expected tax liability for the year. You might look at last year's tax return to get a good idea. Then, you decide how much to pay each quarter. The IRS wants you to pay either 90% of your current year's expected taxes or 100% of last year's taxes. If your income is over a certain amount, like over $75,000 for single filers or $150,000 for married filing jointly, you need to pay 110% of last year's taxes instead. You subtract any taxes already withheld from your paycheck or credits you expect to get. The remaining amount is what you should pay in estimated taxes. These payments are due 4 times a year. The first is April 15th, then June 15th, September 15th, and January 15th of the next year. You can pay by mailing a check or money order using the vouchers that come with Form 1040S. Or you can pay online through the Electronic Federal Tax Payment System or the IRS To Go app. Some people also prefer to pay over the phone by calling the IRS. For Latino families, managing taxes can sometimes feel overwhelming, especially if English isn't your first language. To make it easier, consider using tax software that offers guidance in your language or consult a tax professional. Keep track of your income and expenses all year so your estimates are accurate. This way, you avoid penalties for underpayment and stay on top of your financial responsibilities. Paying estimated taxes might seem complicated at first, but with a little planning, it becomes a simple part of managing your money.